Hello and welcome to another Smaulgld live stream. It is January 9th, 2020. And tonight's topic, India slashes silver imports. We have not discussed India's imports of gold and silver in a while, and they are very significant for understanding the physical gold and silver demand globally, because India is either the largest or the second largest, depending on the year, consumer of gold, behind China or ahead of China, depending on the year, and is probably the largest consumer of silver. And in recent months, India has slashed its silver imports. So I've got some updated charts that show Indian gold and silver imports. For gold, India relies solely upon imports and existing gold in the country to satisfy demand. They have marginal amount of gold mining production in country, whereas China has the world's largest gold mining production, about 400 some odd tons a year. So when Chinese are consuming gold, they're consuming their own supply plus whatever they can import. But India tops the world with imports because they import all of their gold, and they import probably 85-90% of their silver. They do have some silver domestic mining production. They are probably about number 11 or 12th in the world. They're not a significant player, but they do have some silver mining production. The other thing is, we mentioned India and China. They are both disputing some fines up in the north of India or the west of China. Some massive silver fines, but that remains to be seen who's going to get that silver and how it's going to be developed. But for now, India is relying upon its imports, and they're down lately, and there's a reason they're down. Let's take a look first at the numbers, and then we're going to go into the reason why Indian silver imports are way down the last 3 months. All right, let's take a... And also, India is instructive. Its physical consumption of silver and gold is instructive as to why there's a limit on the prices of gold and silver, why they can't skyrocket. Let me explain. So first of all, COMEX is where the gold and silver price is generally set through trading. However, COMEX is somewhat of an artificial market in two respects. First of all, they allow naked short selling. There's not a one-to-one correspondence in the trading. It's a futures market. That wouldn't be as much of a problem if the market were allowed to settle itself out. However, it can't, because they also have trading curbs in place where if the price goes too high, they stop trading. The price goes too low, they stop trading. So the price is somewhat corralled. And that was the idea when setting up COMEX exchanges for gold and silver, to pretty much try to dissuade people from hoarding physical metal, because you can't really get these big price increases, because we've seen these smash downs in gold and silver when the price starts to get away from itself and it comes down. Unlike, that's one reason. The other reason is, as we've mentioned, that silver especially has a commodity demand, and gold also has a commodity demand, and both have a jewelry demand. And when the price of gold particularly gets expensive, people will withhold their jewelry purchases, because remember, you don't have to have jewelry. And for people who are buying it not for investment, if the price gets too high, that has an impact on the physical amount of gold that is sold. You may have an increase in investment demand, physical gold investment demand, but in some respects, the higher the price goes, that is somewhat offset by a decrease in jewelry demand. And the rationale there is because jewelry demand is the largest component of gold demand. It's about 45%. About 40% is for investment demand, and the remainder is for some types of commodity usage and industrial uses. Now, a good part of the 45% of jewelry demand, a good portion of that, maybe 70-80% of that, is, you could characterize that as investment But we have seen when the Indians buy investment grade jewelry, if the price is high, they will curtail their purchases and they'll wait. Remember, Indians have been buying gold for thousands of years, and most families are not relying on a particular month or 2 months to buy gold to add to their supply. So in a sense, most Indian families, other than brand new families, already have gold, so they're not looking to chase the price of gold higher. It's a very significant point, and now we're going to see in these charts how the demand for gold drops off as the price rises in India, and the demand for silver drops off as the price rises, and vice versa, how the demand picks up when the price falls. Let's look at gold first, and we'll get to silver. So here's Indian gold imports for the last 20 or so years. And you can see they're pretty consistently strong, 800, 700, 1,000 tons. And in recent years, since 2015, close to 1,000 tons. Now, this year was looking to be a 800, 900 ton year, and it looks like these numbers are through November. We're only at 661. The Indian gold demand fell off the last few months, and there's a reason for that. And you guys could take a look at this chart on Smaulgld.com. But let's take a look at the price of gold, and you can just see, well, there it is. That's your reason. Look at 2019. The price of gold in 2019, it went from 1,200 to 1,250. But really, in the middle of the year, it spiked. And then it spiked again at the end of the year. And that puts a damper on Indians' willingness to add to their gold position. Now, if you look at 2016, the same thing happened. You've got the big increase in the price of gold. And let's take a look at what happened in that particular year. You can see 2016. The demand fell from 947 tons in 2015 all the way down to 582 tons. Now, this is even more dramatic with silver. But let's just take a look at the monthly gold here. You can see in July, August, September, October, to the far right of the chart of 2019, a drop-off in gold sales. Now, there was a pickup in November, as you can see, up to about 63 tons. So, just like with the price of gold versus gold and silver, Indian gold demand and the price of gold are far more consistent than silver. Silver tends, as we mentioned, to spike and dive in price, and as we're going to see in a minute, the Indian silver demand import also spikes and dives. And that's just a function of the size of the market and the fact that silver is even less desired as a store of value by Indians, and Indians will buy it opportunistically. Whereas gold, they also buy opportunistically, but they actually save in gold far more than they're going to save in silver. In fact, I think it was the Silver Institute showed that really only in 2015 was there large investment demand for silver in India. And most of the silver demand coming out of India the last decade or so is not so much for bullion and investment, but more, in 2015 it was, but in recent years it's an increase in jewelry and silverware. Indians are the largest purchaser of silverware in the world. Most countries, it's culturally, they don't buy silver anymore. India, it's a sign of middle-class wealth, and the same with jewelry. But they're not buying the jewelry as an investment. You'll have middle-class Indians, a large, now 300 million, buying jewelry, silver jewelry, and that adds to the demand. And India also has a large solar a component to their energy plan, and that adds, they have to have silver for their solar panels. But let's take a look at the silver now, and on an annualized basis, which doesn't tell you the full story for 2019, because I'm going to show you the drop-off the last 4 months. 2019 was looking to be perhaps the largest year ever, or close to 2015's 8,500 tons. That's nearly 300 million ounces of silver. but it just stopped in its tracks the last 4 months. And you can see that India, 2015 is a classic example, 8,500 tons. Look at the price of silver in 2015 on the 5-year chart. Here's the 5-year chart. It was just going down all year. It got down to $13 there by beginning of 2015. If you look at a 10-year chart, you could see all of 2015 on that chart. And you can see that as the price is falling, Indians are piling in, and silver indeed hit a multi-year low at the end of 2015. It had been declining all year, and Indians were scooping up the bargain. Now, let's look at 2019 on a monthly basis, or the last 5 years. Take a look. Back in July, India imported 1,042 tons of silver. You could see there was a resurgence in silver demand in India in 2018 and early 2019. Why? The price. Let's go back now to that chart. Well, there's your price from 2018 to 2019. We were on a steady decline from $20 all the way down to $13. And Indians were buying that silver up. And that continued into 2019. But then you see the sharp increase in mid-2019 from $14.50 all the way up to 19, almost 19 and a half. Well, slam the brakes on there. If you're going to buy some costume jewelry, and in Indian rupees, this price isn't even, it was even bigger in Indian rupees. The price of silver rose so quickly that jewelers basically did not sell as much jewelry, and because they weren't selling as much jewelry, the import orders to import silver into India basically came to a crawl. And you can see the same thing happened in 2016. Look at the chart, 2016. You're down at 13, it went all the way up to 20 and a half. Same thing happened in 2019. You were at 14, 13 and a half, all the way up to 19 and a half. And let's go back now and look at the month of the 2016 and 2019. Well, look at 2016, January, February, March, April, May, June, July. You had those very low months of silver imports in 2016 compared to the massive amount of silver monthly imports that you had in 2015, early 2016. You got the same scenario going on in 2018 to the far right of the chart, where the end of 2018 to the middle of 2019, very strong silver imports, and then boom, the last August, September, October, November, a total drop-off. And I don't have December numbers, but I've seen the preliminary numbers, and they're not very good either. But again, this is all about price. Physical demand in India works like a charm. It's all based on price. Now, in the United States and investments, people chase price. The price of gold going higher makes people want to buy it. It makes an Indian say, I'll wait for it to come down again. They're doing it for a lifetime. They're making lifetime purchases. They're not jumping on FOMO and trying to grab that last bangle at $1,600. Now, the last time you're going to buy was, as per our discussion the other night, is when there are these spikes based on geopolitical tensions. There's no point in buying a gold ring at that point. You might as well wait it out. But if you're concerned about your portfolio, or you're just nervous and you don't have any gold, then you might say, well, I'm going to jump in and get some gold because I'm concerned about World War III. But generally, gold is, that, as I mentioned the other night, is trading noise. Gold trades on its fundamentals, and its fundamentals, I don't mean fundamentals necessarily when I talk about COMEX, but they do somewhat trade on fundamentals, on supply and demand, but they trade based on interest rates and levels of debt. And I think those are the main drivers of gold directionally, maybe not on a day-to-day basis. But if you look at when the U.S. was doing, or the Fed was doing QE, and then when the Fed was tightening, the price of gold was going higher as interest rates were going lower, and the Fed was doing QE. And then when they started talking about not doing QE and raising interest rates, and gold fell. And now, since the summertime, since the Fed has basically reversed course from tightening and has made 3 interest rate cuts and is now doing the repo funding. I mean, they're like $500 billion right now. The rest of the world is still doing QE. Japan, ECB, Bank of England. They also have rates at 0 or below. China's just printing up a bunch of yuan. And that's really what's driving the gold price higher at the moment. Now, as I mentioned, the higher gold prices, the higher silver prices curb physical demand on the non-investment side, on the jewelry side, on the silverware side. It's not a good time to buy a silverware set in India when the price is $22, when you could have bought a silverware set when the price was $14 or $15. You don't have to have a silverware set. You can wait a year in the hopes that it might go down. Now, what does happen in India, especially with gold, the price of gold doesn't go down, then there's pent-up demand, and if there's a good rainy season, the Indians will then bite the bullet, so to speak, and they'll continue to purchase the gold at the higher price. But they will stop, look, and listen and not buy, as it looks like they haven't done the last couple of months. But as you see, let's go back to the gold chart. Even though the price of gold was rising in November, it looks like they called uncle and they said, yeah, that pent-up demand, they bought anyway. You can see it went up to 63 tons there, whereas in the summertime, they had slammed the brakes on. But it looks like, and a lot of the forward guidance amongst so-called experts is that gold is going to be $1,600 in 2020, and therefore holding off and trying to wait for a better price this year. If you're going to make an annual price purchase in India, you're probably not going to hold off much longer, and if the new normal is 1,600, then they're going to buy. Now, silver, because it spikes and dives, they're not as confident in that, and you can see, you go back to the silver chart, we didn't see a pickup in November. In fact, we see a continued decline in silver imports. And I do expect that until gold establishes itself again above 1,600, stays above 1,600, moves higher, you're going to see, I believe, silver continue to lag. Now, compare this to Bitcoin. Now, I don't believe that Bitcoin and gold I don't believe that Bitcoin is digital gold. I don't believe any of that nonsense. However, I do like to compare assets. Not because I believe Bitcoin is digital gold. But one advantage to Bitcoin, and there's a disadvantage to this as well, and it's the same with gold and silver, is Bitcoin is of no value whatsoever for jewelry. It's of no value whatsoever as a commodity. It's of no value whatsoever in industry. Which means there is no base for Bitcoin, meaning, for example, for silver, let's say no one ever wants to invest in silver ever again. Does that mean it goes to zero? No, because there's still going to be jewelry demand for silver. People are going to put it in yoga pants. They're going to need it for munitions, to put it in bombs. They're going to need it to put it in electronics. So even if no one ever wanted to invest in silver again, there's a floor on it. Okay. Same with gold. There is some use for gold. However, if people did not view gold as an investment, or did not value gold, prize gold as jewelry, then the price would plummet, because 90% of its demand comes from the fact that people think gold is a store of wealth. They think it's money. They think it's beautiful. They want to have it. It's a status symbol. But if that went away, then it would be valued the way silver is, to a large extent, as something that you need in electronics, small amounts, and other types of industrial uses, but the price of gold would plummet. But there would still be a floor, because it'd be very hard to see gold becoming not attractive as jewelry. It's just established that that's what people want. But let's say they find zillions of tons of gold, well, then it would get cheap. But that's a different reason. The point is that on the downside, gold and silver have uses. Bitcoin has no use other than to exchange as a currency, or just to hold and think that you're storing some type of value. That's why Bitcoin can go to zero, because if it's not valued as a store of value, if it's not valued or used as a currency, then it has no other use. Now, on the flip side, Bitcoin can rise much higher than gold and even silver. Why? Because we talk about silver being able to skyrocket if it catches a monetary bid, an investment bid, and goes higher, and it can go higher. And it would not really impact the commodity demand, meaning when silver went to $50 an ounce in 2011, there was no reduction in demand from industry. If you got to have silver, you got to have silver. Maybe they try to do a little thrifting, but the amount of silver that's in an electronic device is not really going to impact the overall cost of the item or the cost of production. So they're just going to pay the $50. Now, there would come a point if it got to $300 where it'd start to impact, then you would have a reduction in demand. Where you do get a reduction in demand in silver is in jewelry. But jewelry is only 20-25% of the overall jewelry and silverware of the overall demand. So you could easily pick that up on the investment side, and that would, if you had the investment demand going higher, you can boost the price of silver. But you still have a countervailing element in the supply-demand component when you're dealing with silver, because as the price of silver rises, that may attract more investors, maybe not in India, but in the rest of the world. But that does then also start to crimp, not necessarily the industrial demand, but it does start to eat into the jewelry demand, the silverware demand. Whereas we mentioned in Bitcoin, that doesn't happen. There's no other use for it. So as the price rises for silver, there's a limit to how high it can go, because unless the demand is so overwhelming for the investment, you're still going to have a loss of demand on the jewelry side. And it's the same thing for gold. So when you look at gold and silver and Bitcoin, and this isn't investment advice, this is just, to me, obvious, gold is much more stable. It has it's a larger market, it's the largest of the three. It's going to hold its value the most, and because the investment demand is pretty much almost equivalent to the jewelry demand, of which is also investment demand, that any offset in jewelry is almost one-to-one offset on investment. And then if investment demand overwhelms and increases, then you're basically going to have a price rise, and you're going to have demand outstripping supply. Now, there is a point where if the investment demand gets so high that maybe the jewelry demand just evaporates because no one can pay $10,000, $20,000 an ounce for a piece of gold jewelry. But there is a limit there, and then once that happens, then the investment, the price starts to come down because you've lost a big component of the non-investment demand in terms of the jewelry demand coming down. Same with jewelry. But for Bitcoin, if you get a craze, and we've seen this, or this is why Bitcoin has risen much more than gold and even more than silver, is because there's nothing stopping Bitcoin from rising, because it's not taking away demand from somewhere else. There is no other use for Bitcoin, and if the price of Bitcoin is rising, it's going to rise until people don't want to pay that price anymore, and then it can just dive as quickly as it rose. And we've seen that happen. We saw that in 2017. It went to 20,000, went all the way back down. The other difference is, we mentioned earlier, the COMEX has these limits on how high how high gold can go and how high silver can go before they put the trading limits on it. The same thing with how low it can go. They also have all types of margin requirements. If they think that the price is rising too fast or going down too fast, and that the traders are using margin to buy it, they will increase the margin, and then people will have to sell their positions. The price goes down in order to meet the margin requirements. The Bitcoin trading markets are nuts. They have 100-time leverage on some of these exchanges. There is no one exchange that sets the price. So again, that's why Bitcoin can rise and spike 30, 40, 50% in just a matter of weeks. Whereas for silver to do that, it'd be spectacular if it did that over the course of 6 months. And for gold to do that, it's almost unheard of just because of the size of the market. So those are some things to consider when you're looking at things. But India, the reason I wanted to bring India into the whole discussion is they are a significant portion of the physical demand for gold and silver. And I know that the physical demand isn't necessarily what drives the price. We know that the price is driven by the COMEX markets, the LBMA markets, what we would call the paper markets. But there is a point where the physical markets do have something to say about the price on the paper markets. Whereas for Bitcoin, there is no, it's just all thin air, and that's why it can rise and fall in dramatic fashion. There is no India for Bitcoin. Now, what you do have, and the reason Bitcoin rose this past week or so, 15-20%, much higher than the prices rose for silver and gold, is because you have essentially a much smaller market, and then you have demand coming from countries. Who knows if the buying was from Iran? Who knows where it came from? Volume wasn't that strong, but it doesn't take much to ignite a small crypto market, which is largely far less regulated than the gold and silver markets, far less corralled in the sense that you have the price being set on a U.S. market, whereas the crypto markets are just all over the map. All right, so if you want to see these charts, I'll have them up on Smaulgld.com. I'll also put these charts in the Indian gold and silver. I haven't updated those charts in a while, but these have now the monthly and annual gold and silver imports. So let's see what you guys are saying in the comment section. Matthew says, yes, Bitcoin has nothing on rhodium for the past year. Yeah, rhodium actually is outperforming Bitcoin. I was looking at rhodium. And again, you know, a lot of people, plus all this, I guess it's just because it's a mantra here from the Pumper channel. Silver is money, gold is money. As if something that isn't money can't have value. Well, no one says rhodium is money, and rhodium is well outperforming gold and silver, and same with palladium. No one ever called palladium money. So I'm not sure that characterizing something as money and insisting it's money or arguing whether it's money is really relevant to the valuation analysis. I had a show, you can go and watch it on Kennedy Financial. David Morgan and I had a debate whether silver was money or not, and it really is irrelevant whether it's money or not. But I came down on the side that it wasn't money, only because it doesn't meet the one requirement of money, that it's used as a medium of exchange and it's widely accepted. It's not. No one uses silver anymore. Silver can be money, was money for sure. I mean, it fit the classic definition of fungible, desirable, unit of account, divisible, durable, widely accepted. But today, while it is durable and it's valuable and it's limited supply and it's durable and you can make coins out of it, it's not widely accepted. So it doesn't have that element. So it's not money. But so what? Art isn't money, and it doesn't mean it's not valuable. There are a lot of things that aren't money. So when I say gold and silver aren't money, a lot of the people who just binge watch these gold and silver pumpers, they take that as blasphemy. He doesn't know what he's talking about. It doesn't mean that gold and silver aren't valuable. It just means if you're going to go by a strict definition of money, then gold and silver aren't money. So what? That doesn't mean they can't be valuable, because platinum, palladium, rhodium, a lot of things aren't money. Netflix isn't money, and they've increased dramatic amounts, and I believe that gold and silver can also increase, but not because they're money. If you think that gold and silver are going to rise because one day people are going to be exchanging it, I think that's very, very far-fetched. And a lot of people do believe that. They think that the world is going to, they believe in this reset, and this is bound to happen, mathematical certainty. The world doesn't think in terms of gold and silver. That's just a fact. And that's not what's going to give gold and silver value. What's giving gold value right now is the fact that it is a scarce asset, is a historic asset. It's limited in supply, and there's investment demand for it. That's the reason it's going higher. And the argument that it doesn't pay interest is gone, because so what? It doesn't pay interest. Bonds, you pay money to have bonds. So that makes gold very, very valuable. Not because people are going to be going into the store and buying a quart of milk and a cup of coffee with it. That's just ridiculous. There's no reason for anyone to even want that. That's not going to happen. You're in an electronic world. Now, if the lights go out, for a period of time, if people actually did have to trade in gold and silver, especially, not gold, traded in silver locally, that'd be about it. And you might not even get that type of take up, because most people don't even have any silver to trade with people in their neighborhoods. And Most people in your neighborhood wouldn't even accept it because they wouldn't know what to do with it. You could show them a silver quarter and they think it's worth 25 cents. And you'd have to explain for half an hour how they took the silver out of the coins. And by that point, they're going to lose interest and they say, what else you got? So the idea that silver and gold have value because they're money, I don't know. And Indians don't buy gold and silver so they can spend it. They're buying, the reason silver is valuable is because they craft it into jewelry and they make silverware out of it. Not because they want to use it as money. And the reason gold is valuable to Indians, again, they don't spend their gold, they spend their rupees. They don't spend any gold. They store the gold. They hoard the gold. So if gold is even close to money, it's the good money and it's the bad money that drives it out, so no one uses it. So that's fine. So at best, gold and silver are good money that no one's even going to want to use, and currently no one even wants to accept it. Okay, let's see what else we got here. Eli's here. Hello, Eli. And all the regulars here. All is one. He's like number 5. Thank you. Where's Barry? Indians calling me to offer 0% interest on my credit card to steal credit card numbers has dramatically increased in 2019. Yeah, there's a lot of scammers out there, that's for sure. Durgesh Patel, thank you, Lewis. Things here are getting crazy in India over here. Well, I know that the gold and silver price, I don't have the charts tonight, but I'll put them up. They're on the website somewhere. I have the price of silver and gold in Indian rupee, and you've seen a bigger increase in silver and gold than we have here in the United States. Durgesh Patel says, a gold retailer whom I personally know told that there's been an increase in coins and bars of which are 100 grams or more. Yeah, well, people are... to me, it's got nothing to... No one is buying gold because they want to spend it, or they're thinking about a reset. They're thinking about holding its value, and then it's going to rise versus their local currency. Gold has risen the last 20 years against every fiat currency, including the U.S. dollar, and the U.S. dollar is the king of all currencies. But even against gold, as Alan Greenspan says, it has no match. And, the dollar index is up again. It was up last year. It's at 97.43 right now. But still, gold is rising and, of course, beating. Durgesh Patel says 100 grams might be peanuts in the Western world, but in India, upper class are the only ones who can buy coins worth 100 more than 100 grams. Matthew Rhodes, I heard fine wine, collectible cars, and stamps are dead right now. Well, stamps. There used to be, like, coin shops used to be stamp and coin shops. Go into a coin store, they don't have any stamps. No one collects stamps. I collected stamps as a child. I've seen on eBay, the prices are lower. They're like, you can buy the stamps I bought, at face value, first day issue. I don't remember how you used to buy them. But I used to get them from the post office, and they were first day issuance, and they had all these fancy cards on them. And the stamp was 8 cents, and you pay like $1.50, and you can get them for like 60 cents today. They're worth absolutely nothing. No one collects stamps. Stamps used to be very lucrative, but they're not anymore. Fine wine, I know that goes up and down depending on just fine wine and whiskey, I think, and cognac do hold their value over time for very certain years in wine and certain brands of whiskey and cognac. Collectible cars, you got to have a lot of money to collect cars. So I wouldn't say you could store value in those because they're not very liquid. The wine market, though, and the whiskey, those are probably fairly liquid market. There's wine dealers and whiskey dealers you can find. Stamps, I don't know who deals in stamps. I'm not sure. Where are all the dollars going? He says real estate, the stock market, treasury. Yeah. I mean, lower interest rates boost the stock market and real estate, no doubt. Now, there's a limit to how far you can drive real estate just because of income. I mean, you can't take a $180,000 house and make it $4 million. There's just not enough buyers who can afford the payments, even if you have negative interest rates. You just can't pay the principal back on that if you're making 50, 80, even making $300,000 a year. You can't buy a $4 million home, so there's a limit on the price you can pay for real estate. But stocks, we've seen. A company like Tesla can be worth 20, 50, 80 billion dollars, and it doesn't make any money. It doesn't matter what the price is, so you can boost. But at some point, there's a limit. But I always like to say, with gold and Bitcoin and silver, there really is no limit other than what people are willing to pay for it. Same with art. Anything that's limited in supply, and you really can't value it. If people want to buy a Picasso or whatever, Moreau, and they want to pay $80 million or $600 million, they're going to pay it. And it's the same with gold or silver. If people feel they absolutely have to have it, then it can be $50 an ounce, $100 an ounce. And there's nothing to hold silver back other than the commodity demand may dip if it gets too expensive. But look at platinum and palladium. Nothing. Palladium just gets bought at the higher price. Palladium, there's a need for it in catalytic converters, and the price is now $2,100. It was $300 10 years ago. Now, eventually, it'll get too expensive, and they'll switch costs to platinum. But good luck with that, because platinum is just about as rare as palladium, and that's really... So those are two areas where the commodity is going to rise based on a commodity price. Got nothing to do with investment or because palladium is money, period, and it's always been money. Palladium's never been money, and platinum's only been money for about 40 years in Russia in the, I think it was the 18th century when they found it and they started to make a few coins out of it. All right, Durgesh Patel. What else does he say? Lewis, off talking. Have you heard about a gold coin known as a sovereign? I came to know it had been available in India since 2015. I don't know what the sovereign is. I think he says the premium is 12 to 15% above the spot price in India. Is it worth the premium in case you know things in advance? The best way to look at premiums, whether they're worth it, is to go on eBay and see what people are paying in the aftermarket for coins if you think they have numismatic value, or look on your AppMex or other precious metal websites and see what they're selling it for, but that's less important than what they would buy it back for. There's a lot of coins that you can pay a hefty premium on, but the dealer's going to pay you spot or lower when you go to sell it back. It really depends on whether people are collecting a coin, like a gold coin called the Sovereign. And if you're talking about the British Empire coins, yeah, they have the Britannias. Every country issues a gold and not every country, but most countries issue a gold and silver coin. The Perth Mint issues them. In Australia, they have gold and silver coins. U.S. is the Gold Eagle. They have the Gold Buffalo. They have the Silver Eagle. Canada has the silver maple, the gold maple. Those are sovereign coins, and they're not called the sovereign. Austria has the its own philharmonic gold and silver. None of those coins are sold for any type of premium other than a fabrication charge. Now, some prior dated coins might have premiums because they were rare mintage, like the 1996 Silver Eagle. I think there's 3.6 million of those versus an average mintage of about 10, 15 million up till then. So that coin might have a premium on it. But in most instances, bullion coins are going to be traded back to the dealer at around spot price. You're not going to get any premium. Now, I don't know anything about rare coins. Rare coins are like collectibles. They're like stamps. And if you find the right... See, when people say, oh, it's a semi-numismatic, it's a 1989 Perth Mint koala, that's not really numismatic. That's just a special koala, or the same thing with the Chinese silver pandas. Yeah, they're cute and they're different years and they have a different panda on them every year, and some years have higher mintages than others. But those are still bullion coins. They're not numismatic coins. And you may get a premium on them though. And also if they're graded, you may get a premium. But now we're getting out of the whole gold and silver price. You're getting into how to value collectibles. That's what you steal. That's collectibles. I'm talking about collectibles. They're harder to judge. And you can win big with them, but you can also lose. You don't want to buy a coin and get stuck with, paying a high premium. Unless you like the coin and you think you like a coin, you pay $15% premium. It's not worth any more than a gold eagle. You pay a 5% premium, but you like the look of it better. Fine. If you're happy with, if you have to sell it, you're not going to get the premium back. That's fine. I mean, it's a luxury purchase because you like the look of it. I wouldn't do it, but I wouldn't buy art either. But then sometimes you can make money on those types of things. But I think if you're going to buy semi-numismatic coins, I think you have to like it. You just have to want it and not expect to get the premium back. Or you have to find somebody else who likes it just as much as you. You know, that Silver Shield guy, he's got a good thing going there because there's not a big market for those coins, but there's a big enough market, and he makes them in small enough mintages that if he makes 50 of them and there's 300 people who want them, well, then they go up in price. But if you go to a dealer and you try to turn those coins in, they say, okay, I'll give you a spot for it, because they might not be able to find one of the 300 people that want that coin. But online, it's a little easier to find the people who are interested in coins. That's probably your best bet, I think, but I've never done this, and I wouldn't want to get involved in it, buying and selling precious metals online, because then you don't know what you're getting, and you don't know when you send it out whether they're going to send you the money or they're going to return who knows. So, but there are people who do it. I have nothing to do with it, but there's probably online forums that talk about that stuff. Bit of a tangent there. Sorry. Douglas, thank you, Barry. Thank you, Lewis. Is Douglas Patel. Oh, so where's Barry? I bought a couple from World War I era a few years ago at spot. Yeah, well, that's fine. If you buy any gold, you buy at spot. The design is a bonus then if you somehow like the design. But then again, you have to hold it. If you're just interested in the price appreciation, I know this sounds, the gold pumpers hate this. They will just buy the ETF. In fact, you can buy the gold ETF now on the Square app. And you can buy $10 worth of it, and if the price goes up, you sell it. The price goes down, you sell it. Whatever you do, you don't have to hold it. You can't lose it the same way. All right. Well, I think that's about it. I want to thank everyone for joining me tonight. We went overtime with 42 minutes, so I hope to be on again probably tomorrow night. So please join me. And also, if you enjoyed this, please consider becoming a Smaulgld patron or a Smaulgld Subscribe Star member. I'll put the links up, or consider donating to Smaulgld. The best thing is when people send me items and notes. I really do like that. People have sent me checks, postal orders, small amounts of cash, little silver items. I share those online here. Smaulgld LLC, P.O. Box 714, Dover, New Hampshire, 03820. Also, if you need a mug, you can go to the Smaulgld store and get yourself a Smaulgld mug. Start stacking some mugs. All the information on how to help Smaulgld out, or get your Smaulgld mugs, or donate via Bitcoin or Litecoin, they're up on the screen right now. You can hold up your phone to the QR codes, or you can just visit smaulgld.com and you can check out all the charts and subscribe to the website there as well. All right, have a good night, and let's see. Douglas Pertel says, my ancestors were paid in sovereign, getting crazy bids. They were meant to be before 1900. Well, those might have some type of numismatic value, though I don't know. You can go online, Durgesh, and in many instances, that's how I do my charts. You can find mintages of all the different coins, and then you can decide whether they're rare and whether you should pay a premium. Now, there was a big, somewhat of a scandal, and I looked up the mintages of these. There's some French rooster gold coin. They were sovereigns, but they weren't rare at all, but they were being touted by some gold company as being these rare rooster coins, and they were nothing but a bullion coin. When I say a bullion coin, they weren't made to be a bullion coin, but there were just so many of them. They were just worth the spot price, but they were being sold as a premium, and they were also saying you can't confiscate these, all kinds of. You got to be careful. There's always a pump out there somewhere, someone trying to sell you something, especially when you get into gold and silver. All right, have a good night.